Welcome to the Invested Dads Podcast, simplifying financial topics so that you can take action and make your financial situation better. Helping you to understand the current world of financial planning and investments, here are your hosts, Josh Robb and Austin Wilson.
All right. Hey. Welcome back to Invested Dads Podcast, a podcast where we take you on a journey to better your financial future. I'm Austin Wilson, co-portfolio manager at Hicks & Zerker Capital Management.
And I'm Josh Robb, director of wealth management at Hicks & Zerker Capital Management. Austin, how can people help us with our podcast?
Subscribe. If you're not subscribed already, we'd really appreciate if you hit that plus or that follow, whatever button it is on your podcast player that gets new episodes to your player every single time it comes out. Do that, please. Also, if you could leave us a review on Apple Podcasts or Spotify or wherever you're listening, that would be awesome. That would help us to be found by more people. So today, Josh, we're answering the big question.
Yes.
Can this Nvidia rally be sustained? Because it's crazy. Nvidia is up 200 and some percent over the past year or so, like 100% this year. It's really captured the attention of everyone in not just the business world, but popular culture.
Yes.
The theme of artificial intelligence is at the forefront of people's minds, and Nvidia is at the forefront of that theme. So its stock's been on fire. So we want to evaluate what's driving the stock price, kind of talk a little bit about how Nvidia works and why it's doing so well, and then discuss our opinions on whether this can be sustained over the long term, and all of this with the caveat being nothing we talk about is a recommendation.
Right.
So do your investment research, talk to your advisor. That'd be really what we would prefer.
Yes.
If you don't have an advisor, give us a call. We'd be happy to talk to you and maybe help you out on your Nvidia position or not. So yeah, that's today, Nvidia. It's all about Nvidia.
We're talking about an individual company, like you said. This is not a recommendation whether you should buy or sell it.
It's not.
We're going to look at
we'll have opinions.
The history of it and everything, but in the end, this is just our opinion on the company. You have to look to see what fits in your long-term investment.
So why Nvidia?
Yes.
Why is it such a crazy cool story right now? Let's talk about a little bit about the company itself. So Nvidia is really the pioneer in graphics card technology, and those are the things that essentially make your computer run and process things really, really quickly. Yes. GPUs, these are graphic processor units. So they are the leader in that space. And they have different areas of business where they make the GPUs for things like data centers, where there's big buildings full of computers that companies use cloud technology to use all the power of these servers. That's one aspect. They also make the chips that go in crypto mining or gaming computers, and they are the best of the best. They really are. They are the high-performance computing chips that are the backbone of artificial intelligence, and they're used by tech companies all around the world. They've got some really famous particular products that are what everyone wants, and those are the RTX 40 series and the A100 series. Those are their GPUs, their numbers, those are model numbers, and they are the ones that companies are using and buying as much as they can of, as soon as they can, to get their computers to be able to process the most amount of data in the quickest time. So, what happened? Well, this year, and in fact recently, so we're recording this at the end of June, Nvidia most recently overtook Apple and Microsoft for a very brief period, become the world's most valuable publicly traded company.
That's crazy.
Over $3 trillion in market cap. That's insane. And it's amazing, but that's why we're talking about this, is because of how fast this has happened. And this has happened really some of the fastest on record in terms of growth, in terms of market cap. So why Nvidia? That's why. It's one of the biggest companies in the world. It kind of fluctuates around Microsoft and Apple at this point, but $3 trillion in market cap. They've also done a lot to really form some strategic partnerships around different areas of the tech space. Those could be from automotive companies to cloud companies to other artificial intelligence companies that need their chips and their products to do all of the things that they want to do involving AI. And this is actually being trickled down into products you and I use. So first of all the ChatGPT's searches we use, OpenAI, they're using NVIDIA chips to process all the requests that you're sending it. But if you buy laptops or you buy desktops or whatever, a lot of those are coming with NVIDIA chips and they're going to be more and more so that you'll have AI on board. So it's trickling down to just user stuff as well. So let's talk a little bit about the company fundamentals. So the most recent fiscal year ended, fiscal 2023. NVIDIA had a revenue of $26.91 billion. That revenue was up 61% year over year. That's a big jump.
Yep.
And that pales in comparison to their profit or their net income, which was $9.75 billion and up 125% year over year.
That is a 1 year change.
That's a 1 year change.
Going more than double.
Oh, yeah.
A double and then another fourth.
Yep, exactly.
That's just crazy.
And for a large company
Yes.
at that. It's not like it's a small company.
Yeah, you could do that. Yeah, you could do that.
But this
Yeah.
is a large company. And this growth really caused the stock, the last handful of earnings reports, to jump 10, 20% just on a whim. It's incredible. And that's why it's on the front page of the Wall Street Journal and all business news at all the time. So we talked a little bit about their products, but a little bit a deeper look into those two main products that I talked about. The RTX 40 series, that is incredibly efficient in the way that it performs their AI capabilities compared to the prior generation that it was built off of. And it's actually built on Taiwan Semiconductor's 5 nanometer process, which is really, really, really small little chips.
5 nanometers.
Yeah, really small. Think about semiconductors. A lot of them are like the size of dust particles.
My brain, I don't know.
Isn't that incredibly small?
It is.
And
Yeah.
the smaller and more efficient they get, the better processing power per chip you can actually have. And it's just amazing. So this particular product is really strong among gamers, content creators, and this helps their gaming center revenue here. And then the A100 GPUs, this is more about data analytics, artificial intelligence, high performance computing. And this particular product is 20 times higher performance to the previous generations in AI training. Now, this is exponential growth that we're having in
Yes.
terms of AI. So think about Moore's Law, right? Moore's Law is an exponential growth curve. Well, we're certainly experiencing that right now, and this is definitely that. So this is what the tech companies are buying, these particular products, to be able to train their products on AI. Research institutions are doing that, and this is driving the data center revenue because these data centers are really buying the most of them. So let's talk a little bit about the market. The AI market is projected to grow to $191 billion by 2025 over the next year. Data center market revenue is expected to be $110.4 billion this year. And Nvidia's data center revenue just in the first quarter was $4.28 billion, which was a 71% increase year over year. So they're growing just their sleeve, which still has a lot of room to grow potentially at a 71% clip year over year.
Wow.
That's pretty fast growth. The gaming side of things, which is that graphic processor unit, very intense processing power, it's forecasted to reach $268.8 billion by next year. And their revenue was $2.24 billion in that segment, which was a huge portion of their business and continues to be a good profit generator for the company there. I will also note that NVIDIA has grown so well that they've had to consider actually how they get their products, sourcing their products effectively and efficiently so that they always have products on hand and they can sell as many as they can get their hands on. So they've diversified their suppliers. They have long-term contracts. They've invested in that infrastructure and that supply chain behind that, whether that be through logistics and warehousing. They've also collaborated with the upstream side of things from foundries so that they can work together to be able to plan ahead for the demand of these products. And then they're stockpiling strategic products as they get deals and as they find good opportunities in the upstream supply chain side of things.
I mean, how much do you need when it only takes 1 nanometer,
Right, so you
right?
have, $1 million in your hand
Yeah,
at one
like
time?
that's they're
impressive.
stockpiling it in their pocket right now.
And the crazy thing is they're doing this with years ahead of, they already are planning out years ahead of what's coming.
Yeah, that's crazy.
So like we're having trouble getting our hands on exactly what they want now, but they're already planning 5 years down the road, which are even more incredible.
More
products.
silicone and more of the what is that metal that they use in there? Like there's some rare earth metals that they have to put in those things.
Yep.
So yeah, it's not like you go to Walmart or Radio Shack to get your supplies.
No. So yeah, they're continuing to innovate. They're continuing to think ahead, and they're continuing to plan for growth in this space going forward. And obviously, that's coming through. So when you think about investing in artificial intelligence, there's a lot of uncertainty as to what that looks like going forward. And a lot of companies that talk about AI don't necessarily have the fundamentals to back it up. Nvidia does, and that's why its stock is up over 200% over the last year or so. So let's take a break. Josh, dad joke of the week.
All right. So I got one. It's just more of a comment, but a funny
I
one.
like it.
All right. The other day, a man tried to sell me a coffin.
Uh-oh.
I told him, that's the last thing I'll need.
That's the last thing you'll need.
Yeah.
That's good.
So that's the dad comment of the week.
The funeral business, that's one that never goes out of style.
No, it is always in demand.
Always in demand.
Just tell you what.
It's like babies and funerals.
That's right.
At both ends of the
They say what the only things guaranteed are death and taxes.
There's death for you. So let's talk just briefly about competition for NVIDIA. A couple companies to note. AMD, which is Advanced Micro Devices, they are growing their GPU segment very rapidly as well and continuing to launch new products. Intel's another company, more of an established, longer-term company that they're just now getting into the GPU market with their Arc series, and that's
they were
that's
more
still
processors.
Growing. Correct.
Yeah.
So now they're getting the graphics side of things as well. It's kind of early for them, but well, in Ohio here, we're experiencing some Intel growth ourselves. They're putting billions of dollars into plants in Columbus area right now with an effort to grow in the AI space as well. So that's interesting. But really, NVIDIA has a technological edge compared to a lot of their peers. They've been doing this for the longest, and they are the performance benchmark of the world for the graphic processing units. So that gives them a leg up, which is why market share is so favorable for them. So as I mentioned earlier, continuing to advance technology in the artificial intelligence space, their GPUs, again, they're the backbone for AI and machine learning applications, and they have partnerships with the biggest tech companies and research institutions around the world that allow them to kind of continue to pull ahead at this point in that space. And they're continuing to seek new opportunities. So one area that they're looking to grow into is the autonomous vehicle area. So they have a Drive platform which uses their GPU products to learn using artificial intelligence for autonomous vehicles. That's pretty cool.
That is neat.
I mean, you want the if I'm using an autonomous vehicle, I want the fastest processing possible.
I don't want you thinking too large. I don't want lag. Stop at this?
Yeah,
light?
I don't want a lag on whether you're coming up to the back of a car or not. So that's pretty cool. And they're working on continuing to grow that as well.
It's going to be the hardest thing.
What?
Side note. AI or just the learning of drivers, when you add the variable of like animals. So deer, here in Ohio, there's always deer. And like they do not act or there's no rational pattern. There's no pattern to this. It's not predictable.
How do you train something on that's not predictable?
Yeah. Interesting.
Yeah. Yeah, I would be curious to ride in on a fully autonomous Tesla or whatever. Like, what does it do when it's because I see a deer when I'm driving before I would imagine a camera will see it,
because it's got that range. Yeah.
Yeah. So is the camera able to see it in the field next to me?
Yeah. Hopping along.
I don't know. But that's the part that gives me a little bit of pause.
Mm-hmm.
Or like how small of an animal are they able to see?
Yeah.
And are they going to like slam on the brakes for a squirrel?
Yep.
Please don't. That's a bad idea. Remember what you were trained. Don't slam on the brakes for anything smaller than a deer. Can't do it.
Or a cute dog.
Can't do it.
I'll
run it over.
Cute dog.
Nope.
Yeah.
And I have a dog.
Yeah.
Smaller than a deer. Keep him on.
My dog's about the size of a deer, so I guess I'll be all right.
Yeah, that's your justification there. Macroeconomics obviously play a huge factor in NVIDIA, and interest rates and inflation obviously have pressured tech stocks over the last couple of years. NVIDIA got slaughtered. Their stock got just absolutely demolished, but then it rallied way stronger than it has been before.
Yep.
Global economic growth projections affect NVIDIA's growth potential as well. But those are pretty strong right now, especially in the U.S.
Yep.
So that's doing okay. A couple other things to consider: geopolitical factors. U.S. and China trade relations, not always the greatest. We have a lot of friction there right now. And NVIDIA wants to have access to China. China's a growing economy. Their tech sector is growing rapidly. There's a lot of AI demand over there. NVIDIA wants access to that, and if there's pressure from the U.S. or China on either side of that, that really could slow their growth potential. So they're working out strategies constantly to mitigate those geopolitical risks. Some of those are offering different products in China than you get here. Some of those kind of skirt around those rules, but it's kind of a risk either way. So as we mentioned, let's talk about stock performance and valuation of the company. Again, stock's up about 200 and some % over the last year. It's incredible. AMD, by comparison, is only up about 50.
No, only 50.
So great. It's been a great year, but only about 50%. And Intel is about flat in that same time.
That's crazy.
So it's pulling ahead from a stock price comparison. But when you look at valuations, the company is trading currently at about 62.5 times trailing price to earnings ratio. So that would be using the last 12 months earnings, price divided by that.
Yep.
Right? So that's kind of a way to look at how much bang for your buck you're getting in terms of the price you're paying, right?
Yeah.
So the market for as a metric is about 20 to 25 times, depending on what you're looking at. So it's trading at a significant premium
3 times
on a trailing basis.
Yep.
Now, if you look at a forward price to earnings ratio, so they'll be looking at the next 12 months of estimated earnings, that's around 45, depending on where you're looking at that. And that is higher than the market, again, but a little bit lower than the trailing. So that's anticipating that earnings are going to go faster at this point in the next year. So not cheap, but a lot of high expectations are really built into those earnings estimates right now. And I think that's one of the things that I view as most risky is it's done so well and grown so fast and beat expectations by so much that they keep jacking up estimates so that eventually it will miss. And it will probably have a little bit of pressure is my estimate. Again, not a recommendation. If you look at something called the PEG ratio, so that's price to earnings growth, if you look at something, you want to see that around 1 to be fairly valued. That's trading at about 1.5, which would mean it's trading at a premium, even based on the growth that's expected in earnings. I'm not going to get into the details of how that's calculated. If you want, you can chat GPT that with your Nvidia chip to be able to,
there you go.
to see that. But that's interesting there. And again, over $3 trillion in market cap. It's one of the most valuable tech companies in the world. Again, in the top 3 with Microsoft and Apple at any given point. It's amazing, the run. So the question that we need to answer, Josh, is the rally sustainable? And I know my answer.
Okay.
What's my answer?
Your answer? Well, I know my answer.
Yours is it depends.
Yes.
Mine is maybe.
Maybe?
But
that sounds like it depends.
It kind of is because think about this.
Yes.
Like I just said, expectations are very high because analysts have just jacked them up. Every single quarter they've been beat and raise, and just the stock's been going off the charts. So to the moment that you get a whiff of something coming in slightly weaker than expected, you're going to get a bit of a sell-off, right? That's a real risk because of how well it's done recently. I also think that there's still a lot of uncertainty as to the actual demand for AI. We know it's growing. We know it's high, but how long can it continue to grow at this rapid rate? That remains to be seen right now. So I view Nvidia as a wonderful company with a great secular trend growth story that is not going anywhere. But I do view it as a risky play to put all your eggs in that basket. So again, like we would usually say, not a recommendation, but if I were to give a recommendation, right size your position size. That would mean don't get over your skis. Typically, keeping a single stock position under 5% is usually a good way to diversify yourself. Also taking into consideration the other areas in that AI technology space, that exposure that you have. But also, if you're holding a broad index, fund or whatever, like an S&P 500 index fund in your retirement account, you're probably holding something like 7% in Nvidia alone right now, which means that if Nvidia has a significant pullback, it's going to bring down the index quite a bit. So can the rally continue? I actually think it can, but I do think it is very prudent to keep risk in check, and risk is pretty high right now.
Okay.
What about you?
The rally sustainable? Well, it rallied 200%. So I don't know if a rally is sustainable in that I anticipate another 200%.
That's a good way to look at it, yeah.
So is the rally sustainable? I'm going to say probably not. Does it mean the stock price is going to fall? I don't think that either necessarily. Right. I just think that what you saw was the early pricing in of a new technology, new area of the market, the AI, and this is one of the key components to that. I don't think it's sustainable in that this movement is not this percentage movement you're going to see going forward.
Correct.
So that's my stance. I still think it's a good company. It's making the key things for, again, a new area of the market that is very popular. So I agree with what you said. Just be aware of that. It's volatile, and the more extended it gets, the more volatile it will be. Absolutely. So, from an advisor standpoint, it's always looking at this or any other stock who's had a good run to say, yeah, it could continue, but the risk of it coming down, I think, grows over time versus the risk of missing out of future growth.
Yeah.
And so you got to weigh those two risks and say, where should my weighting be? And you're right in that. Don't look at just individual holding it. What other things do I have that may have that same holding? So if I have mutual funds or ETFs that are diversified into that space, how much is my total weighting of this stock, not just what I own individually, but my exposure overall. So just keep that aware. Like you said, 7% of S&P 500 fund potentially because of its weighting and how they do market cap. That's, if you own 5, you're already up to 13, 12%. So it's a lot.
Yep.
So those are the things to think about overall. But like any individual stock, there's risk in owning one. That's what diversification is there to mitigate. And so just be careful that you don't get too excited on just one holding because nothing goes up forever. I do know that.
Another thing to think about is that it's mostly just Nvidia, but a couple other companies that are similar that have really driven market returns in general this year and to some extent even last year. Mm-hmm. And we've actually seen the rest of the market not do that much. Mm-hmm. But because these companies are so large on a market cap basis, looking at a market cap weighted index, they've made the index look like it's doing okay.
Yep.
But the participation in that rally, which hasn't been that great, right? So there's two ways that this can kind of heal itself. This is kind of a discrepancy of what we want to see. We want to see broad market participation. And right now we haven't really seen that. It's been led by only a few companies, Nvidia being the biggest leader. And there's two ways that can correct itself. Number one is Nvidia can kind of come back to the rest of the market, or, which no one would prefer that, right? It's a big company and most people hold it. Or it kind of just takes a chill, takes a nap, doesn't do much for the next 6 months or a year or whatever and digests the rally that we've had, and the rest of the market can kind of slowly chug away higher to catch up. Mm-hmm. Two ways that can work. I think we would all prefer the second.
Yeah, be less painful.
It'd be less painful and more healthy, I think, for the markets overall. So that's kind of what I'm hoping for in the second half of the year, and we'll kind of have to see about that. But yeah, that's the story of Nvidia. It depends. It could be sustainable. It could continue. It's too early to tell, but there is a lot of risk for getting over your skis on a company like this after a huge run, right?
Yep.
All right. Well, thank you for listening. Maybe you had someone asking about Nvidia. Send them this episode that hopefully will answer some of their questions. Always remember you can email us at hello@theinvesteddads.com with any ideas that you may have for new episodes. And yeah, until next episode, have a good one.
Talk to you later.
Bye.
Thank you for listening to the Invested Dads podcast. This episode has ended, but your journey towards a better financial future doesn't have to. Head over to theinvesteddads.com to access all the links and resources mentioned in today's show. If you enjoyed this episode and we had a positive impact on your life, leave us a review, click subscribe, and don't miss the next episode. Josh Robb and Austin Wilson work for Hicks & Zerker Capital Management. All opinions expressed by Josh, Austin, or any podcast guests are solely their own opinions and do not reflect the opinions of Hicks & Zerker Capital Management. This podcast is for informational purposes only and should not be relied upon for investment decisions. Clients of Hicks & Zerker Capital Management may maintain positions in the securities discussed in this podcast. There is no guarantee that the statements, opinions, or forecasts provided herein will prove to be correct. Past performance may not be indicative of future results. Indices are not available for direct investment. Any investor who attempts to mimic the performance of an index would incur fees and expenses which would reduce returns. Securities investing involves risk, including the potential for loss of principal. There is no assurance that any investment plan or strategy will be successful.